I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. The White House says President Trump and British Prime Minister Theresa May spoke today and agreed on the importance of dismantling Russian spy networks in the UK and the US. They also agreed to work together in preventing chemical attacks in both nations. A federal judge has ruled that the District of Columbia and Maryland may proceed with an unprecedented lawsuit against the president. That's according to the Washington Post, which reports the attorneys general alleged that the president's business dealings violated the Constitution's ban on receiving improper payments from individual states and foreign governments. The president's former campaign aide, Rick Gates, communicated directly with a man he knew was a former Russian spy a month before the presidential election. That's according to a court filing by special counsel Robert Mueller. The European Union's making plans to improve military mobility among its member states and allow equipment and heavy machinery like tanks to move across the continent faster. Member states will look at where the bottlenecks are and how to ease customs formalities. The EU also will need to look at which civil projects on roads and railways can have a defense component. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. Bloomberg Technology is next.
This is Bloomberg Technology. Coming up, mega cap tech shares continue their fall, and Amazon replaces Facebook as the biggest loser in the FANG Club. Full coverage of the market sell-off ahead. Still, the Facebook crisis continues to spread. Details on why the company is delaying a new hardware debut. And Trump takes on China. The president's plan to keep Chinese influence from dominating the tech sector. First, to our lead. Volatility continues to grip big tech stocks. Tech was once again the main laggard in the U.S. markets. But on this day, Amazon, Netflix, and Tesla stood out as three of the biggest losers in Wednesday's session. We have to break down the numbers on these huge moves. Mike Regan, who leads Bloomberg's Markets Live blog, and in London, Bloomberg's Caroline Hyde. So, Mike, I want to start with you. Walk us through the biggest winners and losers today.
Well, obviously, like you said, Amazon took center stage today after Axios reported that President Trump might be targeting them for some sort of antitrust action. And if you look at the NASDAQ 100 especially, I mean, Amazon is such an influential stock for that index, and the S&P 500. Of the NASDAQ 100's 69-point drop today, Amazon accounted for almost half of that because it was such a big drop in those shares. So that really gives you a sense of where the focal point was. But that said, if you look at the tech stocks through the goggles of Wall Street, it's not just the technology industry that is being sold most likely. Tech has become a very important part of some of the popular factor and quant investing strategies out there. Obviously, growth being probably the oldest and most well-known, but also momentum. So once there's weakness in some of these stocks, it tends to cause a ripple effect. They can be highly correlated when you look at it from the perspective of these sort of quant momentum and growth strategies.
So, Caroline, this is obviously spreading globally. Talk to us about how markets are reacting in Europe and Asia.
It's the same theme. We're seeing a sell-off worldwide here. I've got a great chart. If you type in #BTV5523, you can see how much they echo the ripple effects from the US spilt over into Asia, into Europe. I'm seeing in Europe, well, tech was the second worst performing industry group. In Asia, it was the worst performing industry group. And like in the US as well, we've seen the ramp up over the past 6 months to 12 months of tech being the outperformer. So down she goes when we start to see these concerns build into the sector as a whole. There's concerns, of course, about antitrust. There's concerns about a regulatory overhang. There's concerns really spilling from Facebook's data debacle onto some of the other far more expensive stocks, in particular particular, it's got to be noted that Amazon and Netflix are two of the biggest laggards, and Tesla, well, they're some of the most expensive. Amazon and Netflix both trade more than 100 times their future earnings. The price is currently trading at 100 times where the analysts foresee their earnings going. And meanwhile, Tesla doesn't even make a profit. So no wonder when we see these sort of shivers go down the spines of investors, they're going to sell out. They want to book in their profits now.
You know, what's fascinating is Facebook actually ended the day slightly up. But if you look at how the markets have performed since the Facebook news broke, the Cambridge Analytica data scandal, Twitter has actually fallen more than Facebook. Mike, why is that?
Well, I think it's sort of the theory that if Facebook's going to get in trouble for this type of thing, that perhaps Twitter will not be too far behind, maybe even Alphabet. I mean, this was the thesis of a very influential short-selling firm called Citron Research, led by a guy named Andrew Left. He's basically shorting Twitter on the notion that if Facebook is getting into trouble for this type of thing, Twitter will not be far behind. There's also obviously been a lot of scrutiny on Android phones and how they interact with Facebook and the data privacy issues there. So, you know, Google's kind of caught up and Alphabet's kind of caught up in this draft as well as a result.
So, Caroline, there are other things, of course, happening around the world. In Brazil, we've been talking about this delete Netflix campaign after a new docuseries that Netflix is airing, focusing on Brazil. What are we seeing there?
Yeah, therefore, we saw Netflix become one of the worst performers on the day. I mean, as I said, Netflix has been one of the best performers over the past 6 months. But this really does seem to be an ongoing concern significantly surrounding these sorts of tech stocks. I've got a great chart showing you the record plunge that we've seen in the so-called FANG darlings over the past couple of days. Remember, yesterday was the biggest sell-off we've ever seen in these names. If you type in #BTV7514, look at those red numbers, and we've seen that sell-off once again when it comes to the likes of Netflix with this delayed Netflix coming over from Brazil. These are global companies that come across global issues. I think Tesla's another fascinating one to focus in on because this is a cross-asset type as well. We're not just seeing these stocks fall, but when they have debt exposed as well. Tesla's debt is now trading at about 86 cents on the dollar. We're seeing really the bond market start to see the concerns about whether we see fatal crashes, tragic as they are, affecting the likes of Tesla, whether you see, of course, whether they'll hit their numbers when it comes to Model 3. So much exuberance has been baked into these companies. When you start to see, even though the economy continue to perform, but individual problems start to weigh on each stock, many people are just looking to have any excuse to hit the road and run.
Mike, talk to us a little bit more about Tesla. We're going to be speaking a bit later in the show about the Model X accident and the production holdups. You know, the stock certainly feeling the pinch. You know, what are you watching there, and what will you be watching going into tomorrow?
Well, you know, obviously Tesla's in a lot of trouble, as Caroline said, both in the stock and the bond market. It's looking pretty clear that they will have to figure out a way to raise more money, either through an equity sale. A lot of speculation that the debt market is just not the place for them this time. More broadly, I think there was a lot of optimism built into semiconductor stocks based on the autonomous driving, autonomous car future, and that's certainly in doubt now. We saw NVIDIA suspend testing of its autonomous driving chip program. So Tesla is, I think, and the Uber crash too, the news of that earlier this week, I think is also hitting the chip stocks at the same time. It's really when it rains, it pours as far as bad news goes for this group. One other story I would point out that I don't think got a lot of attention, but is sort of interesting, is Quebec last night saying it is looking at taxing online companies like Netflix and Amazon. You know, sort of a story that flew under the radar, but I think it's something to keep an eye on to see if other countries follow suit and sort of push back at the big e-commerce giants with higher sales taxes.
All right, Mike Regan, our Bloomberg senior editor, and Caroline Hyde for us live in London. Thank you both. We'll see if it isn't just as eventful a day tomorrow as it was today. Okay. Now, in the latest tech revolving door, Uber self-driving executive RONNY is said to be leaving the company. This comes after a deadly crash of an Uber self-driving car in Tempe, Arizona. Since the accident, Arizona has shut down the testing of Uber's self-driving cars. Uber will also not renew its permit in California to test these cars on the road. And another revolving door, Equifax has named Mark B. Gore as CEO, effective April 16th. B. Gore, formerly a managing director at Warburg Pincus, has pledged to spend more on strengthening security. The appointment comes 7 months after a massive data breach sent the credit bureau's shares tumbling. Coming up, Facebook is delaying the unveiling of new home hardware as the fallout over its data controversy spreads to its hardware line. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. Tim Cook is weighing in on the Facebook crisis. Recode is reporting that the Apple CEO said he would prefer Facebook and others curb their use of personal data, taking a strong stand yet again on the side of user privacy. In terms of regulation, Cook says he thinks the best regulation is self-regulation. When asked what Zuckerberg should be doing, Cook recommended curation. He says Apple doesn't want hate speech on the App Store and that the company will be looking at every app in detail. These comments from Tim Cook's interview will be aired on MSNBC on April 6th. Sticking with Facebook, the fallout from its data privacy scandal continues to unfold. The social media giant will now delay the unveiling of new home products. According to people familiar with the matter, Facebook's new hardware products are undergoing a deeper review to ensure that they make the right trade-offs regarding user data. This announcement comes as the company also announced it is redesigning a menu of privacy settings on its network. Joining us now, who else but Bloomberg Tech Sarah Fryer, who covers all things Facebook. So talk to me about this home speaker and how it was going to work. Because there are some troubling details about just what this speaker would know about me.
Right. So this is really not the right time to ask people to put a listening device in their living rooms. This is a time when people are really worried about all the data Facebook has on them. And basically what this home device would have helped do is it would allow you to video chat with other people in other houses and use facial recognition to let them know who was talking to them. There are all sorts of more intrusive details that would of this kind of artificially intelligent device, including facial recognition, that make it really difficult for somebody to say, oh yes, I want to buy that right now in light of all of this news.
So what exactly is Facebook doing? Because it's not as if they're shelving this product altogether. They're just taking a closer look.
They're taking a closer look.
Possibly waiting for the controversy to subside.
There are a couple things going on, right? First, this news cycle has not been very friendly to them. Second of all, they are trying to say that they're learning, or at least internally, they're trying to learn from what has happened now and are looking at the product to figure out what could go wrong and what are the things that when we launch this, people are going to be really freaked out about. And then they're going to launch it. They're going to have the hardware done in the fall, so we expect them to announce it sometime before the fall.
They're redesigning their privacy settings menu on mobile. What exactly is happening here?
The same thing that we've seen happen from Facebook year in and year out. I remember back in 2014, they introduced this privacy checkup with a blue dinosaur to get people to care about adjusting their privacy settings. It doesn't matter. It does matter, but it doesn't, because when people give permission to these apps, they give permission to Facebook, they're in the moment. They're trying to get something done. They're trying to use a new game. And then years later, they see that Facebook has this information and they say, oh, I never did that. I don't think I would never have done that.
Or if I really understood what was going to happen, I wouldn't have done that. I mean, is that why
if you saw
what Tim Cook is saying here, the best regulation is self-regulation, that the burden really is on Facebook and not on users to opt in or opt out, but on Facebook to, draw a line somewhere?
Well, Facebook is going to try to do that by making it very clear to their users what they have actually opted into. But a lot of these things are very simplified. Like when people give their contact information to Facebook, they don't realize that Facebook is getting their call logs. Like, they think they're just giving them their list of contacts so that they can be connected to people that they're friends with on an app. It's really, you know, simplified and fun looking in this brightly colored interface, but these are really serious issues, and there's a balance of like needing to get people to look at this, but also like the seriousness of these problems. And a lot of the problems that Facebook is dealing with now are not with the current privacy. It's these issues that they had back in 2012 and 2013 when they really just gave out this data without as much thought about the consequences.
I wonder if at a certain point Facebook would whatever say, look, we don't want all of this information, or it's not safe or right for us to have all this information, as Apple has, which has also been controversial, where Apple's saying, look, we don't even know what the data is.
Well, Apple doesn't have an advertising business, and Facebook does. And Facebook is, you know, providing this free service. Apple, you buy their phone, so they don't need to make money off of your data in the way that Facebook does in order to basically be profitable. That said, Facebook is extremely profitable, and they could maybe go with a little less.
All right, Sarah Fryer, who covers Facebook for us, thank you, as always, for breaking it all down. Coming up, as Spotify gears up for its direct listing, we will hear from competitor Pandora. Where does the streaming service fit into the current landscape, and how are they luring more premium subscribers? That is next. This is Bloomberg. Another tech company is going public. DocuSign is planning to list on the NASDAQ, selling shares via Morgan Stanley and JP Morgan and others. The initial $100 million IPO amount is likely a placeholder, and the company plans to use proceeds for working capital and other general corporate purposes. The electronic document software company had a net loss of $115 million for the year, ending January 2017. Well, the music industry has seen a resurgence in the last few years thanks to the proliferation of streaming music. Since going public back in 2011, Pandora has been one of the mainstays in the industry. But with Spotify's direct listing around the corner, the competition in streaming music is heating up. For more on that, I want to bring in Chris Phillips, Chief Product Officer at Pandora. Chris, thank you so much for joining us. So you guys just launched personalized playlists. They go live today, tailored to users' moods, if you will. How exactly will this work and, you know, beef up the offering that you have given the competitors out there?
Yeah, personalized soundtracks just started rolling out to a subset of our premium subscribers today. And it's really a great way to showcase the power of our personalization. What we're doing is we're taking all that we know about our listeners and what we know about the music, and we're using our machine algorithms, the music genome, personal tastes, and we're actually delivering to our listeners playlists based on what their mood, favorite genre, and it gets updated weekly for them. So it's an exciting new opportunity to showcase the power of our new on-demand product.
U.S. music sales climbed 17% to $8.7 billion last year. Streaming services now account for about 2/3 of that pie. What is Pandora's slice?
So Pandora, we're really excited that we are the largest digital streaming service as far as time spent in the United States. So we are really, we have a lot of the time spent, so we're able to monetize a lot of that through our digital audio advertising business. And so in the US, we have a large portion of that, and we're seeing that growing. And that's really exciting with audio right now. With the use of voice-activated speakers, the music industry, even podcast and spoken word is growing. And that's where Pandora is really well positioned to take part in that.
So time spent is one thing, but how do you convert more of your free users to paid?
Well, we tried to, first of all, we have an offering that lets users have choice. So if our listeners want to stay in our ad-supported product, we're continually making that better. Our investment last week in acquiring WOES is a great example where we improved the ad tech to make the advertising experience with music great. And we're trying to showcase that we have a premium offering and on-demand features, such as personalized soundtracks. This way they can see the power of, we can give them that on-demand format with playlists, with picking the songs they want to play when they want to play them.
Pandora has been a public company for some time now. How does Spotify's direct listing change the game?
It's a good thing for the music industry. It's a great thing. It's taking advantage of the growth in the digital audio. There's investment coming into the space, and we think we're well positioned, given the size of our audience and the expertise we have in delivering super personalized programming, and being able to monetize that for ad-supported, as well as having a subscription product. So we believe it's a positive thing and that we're well positioned.
What are the challenges of being a public music company? I wonder if it'll be nice to have them in the same boat, essentially.
Yeah, it will be. And, you know, I'm the product guy, so I'm always focused on building a great offering and getting that out to our listeners quickly. But yeah, we have to showcase how we're performing, you know, every quarter, and that's important data for our investors and for our advertisers. But, you know, I focus a lot on what we can do to really up our game and keep our product being innovative for the listeners and bringing new innovation for the advertisers as well as the music industry. So those are the things that I focus on.
So look, you know, the challenge for Pandora is that Apple Music and Spotify are getting an increasing share of the pie. How do you lure some of those users back?
Well, the quality of the service is key. So there's something about the fact that you can tell Pandora you want to hear this song, we play it, and then the programming that happens after that is just perfectly tailored to you in the context you're in.
But Pandora has always been that.
We've always been that from a station experience. What we had to do is in the last year, we've evolved it to deliver that experience in an on-demand format. So if you want to create a playlist, for example, you give us a few songs, we'll finish it for you. So we can use that, the genome that we've used to analyze music, the algorithms, and not just for radio, which we continue to be very strong on, but we can use that same tech for the on-demand features and make those really different and better than other services.
So there have been a lot of leadership changes at Pandora over the years. How is the team weathering that, and what is the next phase?
Yeah, we're real excited about a lot of the new leaders on our team. You know, Roger Lynch is doing a great job bringing in amazing experience. We've had a lot of new members on our board come in who really understand our business. They understand the industry, and they're supportive. And in my spot, it's fantastic because we're investing in our product and we're investing in innovation.
You know, I know that you are the product guy. I'm curious, though, what trends you're seeing in ad sales, especially given the midterms coming up. I remember Tim Westergren, the founder, told me once that Pandora can tell whether you're a Democrat or a Republican, and that's something that Pandora can, you know, potentially exploit as we go into the midterm elections. Is there anything interesting or special that Pandora is doing?
Well, you know, we spend so much time with listeners, so we know a lot about their tastes. We know we can anticipate the language they might speak and the fact that they might have children and where they are and the context of their life, and that helps us do really wonderful targeting around our advertising. And advertisers, what's happening is they want to be able to tell a one-to-one story at scale. So how can I reach the right listener at the right moment with the right message and then measure it and see the effectiveness? And our service is really tailored towards that.
All right, Chris Phillips, Pandora Chief Product Officer, thank you so much for stopping by. Great to have you here on the show. Coming up, more about targeting technology and why the president is taking aim at China's tech sector. Are we entering a tech Cold War? That's next. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. White House Press Secretary Sarah Huckabee Sanders says President Trump has not considered pardoning former top aides Michael Flynn and Paul Manafort in the Russia investigation. She adds the president's lawyer has said as much.
I would refer you back to Ty Cobb's statement that there's not discussion or consideration of that at this time. So there would be no reason for me to have had a conversation with the president about that, because that is not being currently discussed at the White House.
The Kremlin says a summit with President Trump is still on the table despite the expulsions this week of 60 Russian diplomats. Moscow says it's up to the U.S. to decide if it still wants to meet. Japanese Prime Minister Shinzo Abe said today he worries that North Korean security threats to Japan may not be discussed at a U.S.-North Korea summit this spring. Abe told Parliament of his concerns that President Trump will focus on intercontinental ballistic missiles and forget shorter-range missiles that threaten Japan but not America. France today bestowed its highest honor upon the officer who was killed last week after volunteering to exchange places with a female hostage at a supermarket in Trèbes. Lieutenant Colonel Arnaud Beltran gave up his weapon and went inside the supermarket where people were being held. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 5:30 p.m. here in New York, 8:30 Thursday morning in Sydney, where my colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Well, it's looking like a down day to end the week, with tomorrow a public holiday, of course. We've got the NZX already off 2/3%, following Wall Street indexes lower. We had the Dow and the S&P both weaker. The NASDAQ heading for its worst month in 2 years, with Amazon really weighing on the NASDAQ there. Despite all that, futures in this part of the world looking reasonably optimistic. We're seeing modest gains ahead of the open here in Australia. Big jump for Nikkei futures, up more than 2.7% there. The Aussie dollar, don't be deceived by that green number. It is showing more weakness against a resurgent US dollar, and the same for the Japanese yen, also weaker against the US dollar. The commodities complex not doing so well. Gold and oil both weakening. Oil lower on swelling US crude inventories. Copper and iron ore both weaker as well. Elsewhere, waiting on Japan retail sales for February. That's due out a little later on. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. First, he took aim at China's steel. Now President Trump is targeting China's tech. Trump is said to be planning curbs on 10 strategic industries that Beijing aims to dominate this century, the so-called Made in China 2025 initiative. Here's White House trade advisor Peter Navarro on the president's plan.
Certainly the focus of the tariffs are on what's called the China 2025 industries. China, in my view, brazenly has released this China 2025 plan and basically told the rest of the world, we're going to dominate every single emerging industry of the future, and therefore your economies aren't going to have any future.
To examine the impact on what this means for tech industries both here and in China, I want to welcome someone intimately familiar with Chinese technology and policy issues. Adam Siegel, the director of the Digital and Cyberspace Program at the Council on Foreign Relations. Adam, there is so much speculation about who the winners and losers could be here. The reality is we don't really know. But what is your assessment of the possible impact?
Well, I think you're right. We don't know. And when they name the specific sectors that they're going to try to penalize, then we're going to see a lot of people trying to lobby to be left out of the tariffs. And we're going to have a good sense of where you might fit on that supply chain and how you might be punished.
So, you know, again, who do you think the winners and the losers could be, essentially?
Well, they've been fairly clear that they want to punish China in high tech. So in IoT and Internet of Devices, Internet of Thing devices, in automation, in robotics. The Made in China 2025 plan is basically an attempt to move China up the value chain from just labor-intensive production to internet-based 3D design. So if you're in any of those areas, it's very possible that you're going to be caught up in the tariffs. Artificial intelligence, robotics, automation, those are all areas that I think would be likely targeted.
I wanted to ask you about artificial intelligence specifically because there has been so much talk about how the Chinese could win in the race for the most sophisticated artificial intelligence. You know, talk to us a little bit about just how advanced China's efforts are there compared to the United States.
Well, the Chinese really have three advantages. The first is just the size of the data, right, and the market. 750 Chinese web users, and that data is available to the big players: Tencent, Baidu, Alibaba, JD.com. The other is an ability to use that data, right? So Chinese privacy concerns not as high in the U.S. than they are in Europe. And then third, a government strategy. So a very big push from the top for China to be a competitor in this space. The Chinese firms are still not as competitive as U.S. firms. Most of the important research is still being done in the U.S. China lacks on the talent side, but they are clearly a fast competitor to the United States in this space.
All right, now we do have a bit of breaking news. Veteran Affairs Secretary David Shulkin is being replaced by President Trump. The president will nominate his personal physician, Ronny Jackson, to succeed him. The turnover in the White House, Adam, continues. It actually leads to a pretty good question on these issues, on the tariffs. Given the uncertainty of just who is in these jobs, how do you think that'll affect how the policy actually plays out?
Well, it's certainly affected the Chinese. They have been scrambling to figure out who they should talk to and who they should negotiate with. I think the president has been pretty consistent about wanting to reduce the deficit, the trade deficit with China. So I suspect no matter who's in the positions right now, we will see consistency there. Earlier you showed us the quote from Peter Navarro, and he seems to have really, after a year, positioned himself to take the lead on these issues. And with the USTR's 301 report out, I think there'll be consistency in policy, even if there is some more moving around of the deck chairs.
Now, the administration is also reportedly considering trying to penalize or influence Chinese investment in U.S. tech sectors. Specifically, they've been talking about semiconductors and 5G. How do you expect that to play out?
Well, as you noted, we've already seen that, right? The president blocked the Broadcom acquisition of Qualcomm. We've seen leaks of documents that supposedly the government was thinking about nationalizing the 5G networks. But I think the most likely move forward is a reform of the CFIUS process, the Committee on Foreign Investment in the United States. And there's been concern that some of the ways that China has been acquiring technology, they've been either using minority positions or going after companies that are bankrupt or trying to buy IP. So I think that process is going to be reformed. There's a bill that has pretty broad bipartisan support, and that will make it harder for the Chinese to invest in a number of critical and sensitive technologies.
All right, Adam Siegel, Director of the Digital and Cyberspace Policy Program at the Council on Foreign Relations. Thank you, as always, Adam, for joining us on the show. Well, SoftBank and the Kingdom of Saudi Arabia are going all in on solar. SoftBank Chair Masayoshi's son and Saudi Crown Prince Mohammed bin Salman signed a memo of understanding for the $200 billion solar power project. The venture would supply 200 gigawatts of solar energy to Saudi Arabia, tripling the country's electricity supply by 2030. Sun claims it will create as many as 100,000 jobs and shave $40 billion off power costs. Coming up, the pressure is on Tesla stock as scrutiny increases over a fatal crash in California. We'll talk about that next. And another stock to watch in autos, General Motors regaining its position as the most valuable U.S. automaker this week as Tesla stock continues to slide. This is Bloomberg. The New York Auto Show is taking place in the shadow of a recent fatal Uber self-driving car crash. Now, while that's not stopping automakers from showcasing their latest vehicles, it has got some execs calling for federal intervention. Take a listen to Audi President Scott Keogh.
You do need a federal standard because that'll get away from a lot of this each state's coming up with different initiatives and how they work towards it. But clearly, caution is the name of the game because you're talking about people's lives. That's what we've always said, and that's what we will continue to say.
Meanwhile, the path forward for driverless cars is still unclear, especially in the wake of 2 fatal crashes. The first involving that Uber autonomous car in Arizona, and then another just last Friday involving a Tesla Model X in California. Tesla stock is tanking on this news. The company said it is working with authorities to retrieve the vehicle logs. The crash, which killed the driver of the car, adds to CEO Elon Musk's challenges, including concerns that the electric car maker won't reach its production targets for the all-important Model 3 sedan. For more, I want to bring in Bloomberg Businessweek's Max Chafkin in New York. So, Max, we're learning more about this Model X crash. At this point, where do we stand?
So we don't really know much of anything except there was a very significant accident, and Tesla is saying it's the most damage they've ever seen to one of their Model X SUVs. The reason this is sort of a problem for Tesla is that they also have this huge production sprint going on, trying to get as many Model 3s produced this year as possible, and to the extent that they're not able to hit those numbers, and you have something like this that calls into question the company's long-term prospects, that could be sort of a toxic mess for a company like Tesla.
Combine all of that with the general news about production delays. How much does this really set Tesla back?
Well, I mean, I think it's so Bloomberg has a model that it's very impressive. We don't know how close it is. The model has been showing that Tesla's production is likely ramping up towards the end of the quarter. So it's possible that even though the numbers have not looked super good, that Elon Musk will come out and say, yeah, we knocked it out of the ballpark because they were able to do sort of a last-second sprint. That said, this is more than a sprint. I mean, they have to get to basically hundreds of thousands of cars a year. Which is something they haven't done, no one has done with an electric car, so yeah, I mean so investors are going to be reading the tea leaves. But again, whatever happens this next quarter, they're going to have to continue, growing production just on a huge scale, for the coming year, basically.
We do have a chart here that maps real-time negative news sentiment hitting Tesla. #BTV 927. The red is negative, the green is positive, and they've been getting a lot of bad news lately, so not surprising the way this chart looks. What do you make of Tesla's response and the fact that even they had said they've never seen a crash like this before? They're working with government agencies. Is that standard?
Yeah, I mean, I think what Tesla is trying to, the line that they're trying to walk is they want to take this seriously, and we're seeing this with Uber as well. They want to see this, take this seriously, but they also want to leave open the possibility that yes, even though there may have been a very bad accident here, a very bad crash, maybe even one in which the car didn't perform as they had hoped, that their autopilot could still be better on average than a human behind the wheel. That was kind of the argument that was made in the wake of the crash last year where a person was tragically killed. And I think it's sort of the general tension around autonomous driving in general. It's like everyone even people who believe in this industry know that there are going to be bad things that are going to happen, and they just hope that the number of those bad things is less than what happens today with humans behind the wheel.
Right, and I wonder, though, we're hearing Uber's not going to renew its license to test cars in California. Arizona has taken Uber self-driving cars off the road. If this is going to take a lot longer than some would have hoped to get self-driving cars out on the road en masse in a way that is surely safer than the roads as they are today.
Yeah, 100%. I think that's one of the reasons you're seeing Tesla stock take this hit. Because remember, Elon Musk has said that the cars that are on the road today could be self-driving cars, with some updates and stuff. So part of the sort of bet on Tesla is betting that self-driving is going to come sooner than people think. That's going to be how Tesla is able to sort of dominate the auto industry. And if it takes longer, either because the tech isn't there or because regulators just can't get their heads around it, and that we as a society can't sort of come to terms with whatever compromises have to be made, then that's gonna slow this down, and that's gonna hurt the companies like Tesla that are betting on it.
All right, Max Chafkin, our Bloomberg Businessweek columnist in New York. Max, as always, thank you for joining us today. Coming up, Adobe, best known for programs like Photoshop, but its CEO is looking to make a serious push into AI. Our conversation with Shantanu Narayan is next. This is Bloomberg. Plantronics, a maker of phone headsets and accessories, agreed to buy Polycom in a deal valued at $2 billion. The move helps Plantronics gain a leading position in voice and video services. The deal is expected to close in the third quarter. Adobe Systems has been spending time trying to figure out what makes consumers tick. The company is working to diversify after decades of relying on Photoshop and other creative software used to alter digital media. Adobe successfully adopted a cloud-based subscription business model, and shares have soared on investor enthusiasm for its marketing and analytics efforts. Now, the company's next goal is to turn the 35-year-old software maker into an AI powerhouse. Earlier, I spoke with Adobe CEO Shantanu Narayan and asked how his company compares to what his competitors are doing.
When you think of our enterprise strategy, what's really unique and differentiated about the strategy that we have is that we think experiences is what distinguishes how companies are going to distinguish themselves. And from our perspective, it starts at content. We are well known for producing the world's best content, and I think it's at the confluence of content and data where the next frontier of enabling enterprises to engage their customers is going to be. And we created this category. We're the undisputed leader in the category. There's certainly a number of other companies that are looking at that opportunity, but at our core, we're a product company, and the innovation that we talked about at our summit today shows that we're continuing to invest and remain the leader.
Everyone is concerned about their personal data, especially in the wake of the Facebook Cambridge Analytica scandal. What are the limits of these kinds of targeted campaigns, and where are you drawing the lines at Adobe with respect to data privacy?
I think there are two elements that need to be absolutely sacrosanct in this equation. And the first is the responsibility that all companies have towards protecting people's data, because the trust that customers are placing in us, we are in an interesting position because on the Creative Cloud, we have millions of subscribers. And so we understand, I think, better than other enterprise companies what it takes to really deal with all of that data. So having a technology that allows the customers to be in control and staying ahead of some of the regulations that are coming, like GDPR, is how Adobe is stepping up and enabling our enterprise customers to engage with their customers in a safe and trusted way.
So do you think regulation needs to happen here, and if so, how?
You know, from my point of view, I think companies have this awesome responsibility that they need to step up to. I believe that customers will actually hold companies accountable and responsible. And with the space changing so fast, I think it's actually better that companies step up to that responsibility and deal with it appropriately.
Will rising privacy concerns make it harder to do targeted marketing campaigns?
I think as long as you have the customer feel in control of what they want companies that are targeting them to know about them and deal with it in a systematic and pure way, I think, you know, we will continue to find ways to deliver personalized experiences, because customers also have this innate ability to want to be treated as specific individuals. So I think it's a balance. I think the Adobe technology enables companies who want to deliver this personalized experience to accomplish that balance in a good way and keep the trust that they need to with customers.
What potential do you see in new formats like AR and VR, especially given that VR, you know, the VR revolution that was supposedly coming hasn't nearly happened yet?
Well, today at the conference, we also announced a deep partnership with NVIDIA in terms of having our artificial intelligence and their market-leading GPUs and AI work together. And I think both companies would say that AR is probably closer in terms of augmented reality and getting that immersive experience. Virtual reality is applicable for some specialized use cases right now, but I think AR is where a lot of the action is, and I think augmenting it, the smartphone is clearly a great authoring device for AR. So it feels like AR is a little bit closer, and the technology for VR will continue to need to mature.
We've been covering how AI can be biased, especially when the teams building these systems are not diverse, and we're at the risk in an industry that is not very diverse of rewriting some of that bias into the algorithms of the future. How do you at Adobe combat that?
I think the only way you combat that is a realization all across the company that when you're targeting a diverse set of customers, if the employee base doesn't mirror that diverse set of customers that you're targeting, that, to your point, biases might emerge. And I think the way Adobe continues to focus on it is ensuring that we have the most diverse employee base as well as customer base. We've always been known as one of the best companies to work for, and it's a core tenet to what Adobe stands for.
Now, looking forward, I'd love to hear an outlook on the business. Your creative business is still growing faster than the marketing business. Will that continue? And what is your outlook for the enterprise cloud side of the business?
Emily, we had a very strong Q1, as you know. We had, again, record revenue. The creative business is certainly growing very fast because we think that creativity, it's the golden age of creativity, and everybody wants to create a story, whether you're a student or whether you're a large enterprise that's engaging with customers. The marketing business also had a very strong quarter. Underlying there, we have been moving the business to be a completely cloud SaaS-based business. The revenue grew north of 20%. So, you know, we're in an enviable position in that we're one of those unique companies that's growing top line incredibly well, and we have bottom line also growing well at a very substantial margin. So we think both businesses will continue to grow in the future.
Adobe CEO Shantanu Narayan there, and the Trump revolving door continues. We're getting headlines that the president plans to tap Mark Rosen as executive director of the IMF and to nominate David Eisner as assistant Treasury Secretary. We're going to keep you posted on all these moves, as always, right here on Bloomberg Television. Thank you for watching. This is Bloomberg.